All right, let's dive right in. Today, we're putting a single stock, EBS, under the microscope. Think of it like a full technical checkup, where we look at its current health, the good, the bad, and what might be coming next.
So first things first, we need a baseline, a starting point. And that's the last closing price for EBS, $12.84. Keep that number in your head because everything else we're about to talk about revolves right around it. And boom, right away, here's the central conflict. This is the whole reason we're doing this checkup. The technical signals are telling two completely different stories at the exact same time. On one side, you have all the signs of a powerful, really undeniable uptrend. But on the other side, we've got these bright red flags weaving, warning of a high overbought risk. So which story is the right one? Let's break down the evidence for both. Okay, let's start with the good stuff, the bullish case. This is all the data that suggests this stock is strong, that it has some serious momentum on its side. For anyone who's feeling optimistic, this is what they're looking at. Now, before we get to the numbers, let's be super clear on what we mean by trend strength. It's not just about the price going up, it's about how it's going up, how powerful and consistent that move is. You can think of it like a car's horsepower. So the data here, well, it paints a really clear picture. The ADX shows a nice, healthy trend, but the Arun indicators, that's what really jumps out. You've got Arun up at a perfect 100, and Arun down is at 0. I mean, that's about as unambiguous as it gets. It's telling us the bulls are in complete control, and right now, the bears are just not in the picture. This right here really drives home just how powerful this recent move has been. The current price isn't just a little bit above its averages. No, it is way, way higher than all of them, from the super short-term 5-day all the way out to the long-term 200-day. This is textbook confirmation of a strong, established uptrend. And it's not just the trend. The momentum is there too, and indicated like the MACD is sitting firmly in positive territory, which basically tells us that the engine driving this stock higher still has plenty of fuel. So the bullish case looks pretty solid, but that's only half the story. Now, let's flip the coin. All right, now for the other side of the argument. Here, we're going to look at all the cautionary signs, the indicators that are flashing red and telling us to be careful. So you have to be asking yourself, with a trend this strong and all that positive momentum we just saw, what could possibly be the problem? What are the bears so worried about? Well, this number is the problem. This is the Relative Strength Index, the RSI. And as a general rule, anything above 70 is considered a warning sign that a stock is becoming overbought. And at 78.20, EBS is deep into that danger zone. So what does overbought actually mean? It doesn't mean the stock can't go higher. A great way to think about it is like a car engine running in the red on the RPM gauge. Sure, it can keep going for a little while, but it's under a ton of strain, and the risk that it's going to need to cool down, or in this case pull back, is much, much higher. And the RSI isn't screaming into the void alone. It's like a whole dashboard of warning lights is lit up. The StochRSI, another momentum gauge, is at a perfect 100. I mean, it can't get any more overbought. The CCI, which measures how far the price has strayed, is at a crazy high 498. Even the price itself has launched way outside its normal trading range. So it's not just one warning, it's a whole chorus of signals all yelling that this stock is overheated. And now for another pretty incredible number. The price has stretched over 31% above its volume-weighted average price, or VVAP. Just think of the VWAP as the stock's center of gravity. For the price to be this far away from it, well, that's a big deal. And honestly, this is the perfect analogy. A deviation this big is just like stretching a rubber band to its absolute limit. Could it stretch a tiny bit more? Maybe, but the tension is just immense, and the odds of it snapping back toward that average price get higher and higher the further it stretches. So, we have our diagnosis, a patient with a strong heart but a dangerously high fever. With all these conflicting signals, what's the prognosis? Well, the data suggests 3 pretty distinct possibilities for what could happen next. Okay, here are the 3 paths. Path number 1 is the bullish breakout. The powerful trend just wins out, it smashes through that resistance level at 1389, and it just keeps climbing. Path 2 is the bearish correction. The overbought condition wins, that rubber band snaps back, and the price falls to find support around 1236, or maybe even lower. And then there's path 3, A stalemate. The bulls and bears fight to a draw, and the stock just chops sideways for a while, cooling off without actually crashing. So after this whole technical checkup, what's the final verdict? What's the one thing we should really take away from all this data? Here's what it all boils down to. We have a classic standoff. The underlying trend is undeniably strong. You can't argue with that. But the stock is also undeniably overheated. It's stretched. The whole thing is likely going to be decided at two key levels, that resistance at 1389 and the support at 1236. Whichever one of those breaks first is probably going to tell us who is winning this fight. And that leaves us with the ultimate question, doesn't it? In this technical tug of war, you have incredibly powerful momentum on one side and some very clear, very extreme risk on the other. Which force is going to win? Well, that's the story the chart is going to tell next. Thanks for tuning in.